Aloha, YouTube investors. How is everybody doing today? My name is David Jansen. Welcome to my channel. Today is August the 13th. It is a Thursday, 2020, and we are looking at my M1 Finance portfolio. Excuse me. The Dow finished in the red today, the S&P 500 finished in the red today, and the NASDAQ is on a 2-day win streak, being in the green for 2 days in a row. Propped up mainly by Apple. Apple has been doing very, very well. And what we are looking at here is my M1 Finance portfolio. All time, you can see I'm at $46.27.92, up $332 and up 18%. We've had some volatility here nonstop, and it's a volatile time anyway because of a new president possibly being elected and Senate races, Congress races, stuff like that going on. And of course, we have this recession that kind of jumped off here in March with a lot of businesses closing and sales and revenues and things like that going down for a lot of businesses. A lot of people on unemployment, so that has kind of kept the stock market, or it has kept the economy down, but the stock market has continued to do well. And it seems that the stock market, much like 2009, is starting to get back to high levels again. It's still not a V recovery from the chart that I looked at earlier this morning. It kind of can be a V. It's not a straight up V. It's kind of like a, kind of like, I guess this, which I guess that's still kind of a V. So, but, yeah, so people are saying that the stock market is kind of overpriced. I kind of tend to agree just by looking at the valuations and the PE ratios of a lot of these companies. So I've got a couple strategies that I'm kicking around that I might implement in next month, depending on how things go. With flu season coming up in September, there could be a downturn with more closings, especially on the U.S. mainland. I'm in Hawaii, and the city of Honolulu, the island I live on, is Oahu, and I live in Honolulu, is on lockdown again because we've had significant triple-digit cases over the last few weeks here, and so more people are being hospitalized, and from those we've seen some new deaths. So things are on lockdown again here, and flu season coming up on the U.S. mainland where the temperature gets colder as possible, so there could be some dips on some of these prices, which is good and bad. It's bad for the stock market. It's bad for your portfolio, depending on which holdings you have. But it's also good, depending on which holdings you have, if you can get them cheaper. And if you can get them on sale, like what happened in March, and there are some that I'm eyeing and kind of hoping that they go on sale this fall or maybe in January, then I can get them at a cheaper price and still get paid the dividend. So if you haven't seen my previous videos or you haven't subscribed, go ahead and do so. There's a button there that says subscribe. Hit that subscribe button. Also like the video. Both things are free to you and help support the channel. For those of you who have subscribed already, I appreciate it. Thank you. Continue to support the channel by hitting the like button and sharing with your family and friends and watching my videos. So looking at my holdings right now, my blue chips all time up in the green, and these are some great companies here. I have a video highlighting some of these that have just done really, really well for me. Now, some of them dipped significantly in March, like a lot of stock prices did in March, but they're solid dividend-paying companies. I'm primarily a dividend investor for long-term dividend payouts. The only one here that suspended their dividend that I own is Disney, and Disney is still a great company. And as you can see, they're still doing well because people know that eventually their ships are going to sail again, all their parks are going to open again, and there'll be live sports on ABC and ESPN again. So I mean, it was kind of trading high already as it was before the dip, and now it's trading high again. If you look, according to M1 Finance here, it says the PE ratio, oh, well, it just changed it. It says it's negative 218 now, where before it was, I think it was 36 or something like that. So I'll have to do a double check on the Disney website and the NASDAQ.com to see exactly what they're trading at. But it still seems to be kind of high at $130, and I got in, my average is at 129, which meant that I actually bought a little bit higher because I bought fractional shares of this before I got a full share, before I got the full 2 shares of Disney, and some of that I bought on the downturn, but I had bought kind of high already as it was, so that's why my average price is kind of high. The rest of these long-term dividend paying companies, Johnson & Johnson, very solid dividend king. Pepsi, I think they're in the 40-year mark area. AT&T's in the 40-year area. Coca-Cola's 46 years, I believe. Verizon, not necessarily increasing their dividends as a dividend aristocrat, but they're still a blue chip, solid company. And if you see my previous videos, I talk about why I like Verizon so much. Not significant swings in the stock price, but they still generate all kinds of revenue, and they're pure play communications right now. It's kind of them and T-Mobile, where AT&T is a mix of things. Verizon does have Yahoo. I believe they still own Yahoo. And somebody mentioned in an article that I read 2 weeks ago that maybe Verizon should buy TikTok. I mean, I wouldn't do that personally, but you know, whatever. And Verizon does have TV as well, so they're not entirely a pure play. And when I had Verizon Television, when they first came out, their cable fiber optics first came out when I lived in Southern California, I thought it was amazing. I thought it was a great move by Verizon. They were the largest cell phone provider at the time and still are in the U.S. So they're just one of my favorite companies to hold because they don't have the big swings. As far as my REITs are concerned, these real estate investment trusts, Equinix, I just highlighted them in a video yesterday about how they're breaking ground and growing, and I see them as kind of the future as being a data center play. So check out that video if you want to know more about them. Something I didn't mention in that video is that their funds from operation was actually up this last quarter. So that is when you get capital gains, dividend growth, and revenue growth on top of it, really good company. And the rest of these are pretty much future-proof as well too. I've yet to add it to Crown Castle International, which does the cell phone towers as well. But eventually I'll put a price in there. And I might be better off waiting to see if there is some type of dip coming in the fall to buy into Crown Castle instead of getting it at the, 170 is trading at right now. And then just to quickly kind of go through the rest of these really quick here. My tech, NVIDIA, my favorite chip maker right now. Intel, I'm still going to hold. I did a video on why I bought more shares of Intel, so check that out as well. IBM, I think they're going to be okay. I think they're going to move in the right direction. Their earnings, their revenue really isn't, it's been dropping for several years, but their cash flow is still solid. So, and I believe it's some of the contracts that they have that are ongoing. So we'll see what happens with IBM and their Watson service and AI and everything. MasterCard, I plan on adding more to, as they still have significant growth around the US, and then eventually I'll add to Visa as well, which I see as more of a solid, stable, consistent dividend grower. And my consumer cyclical, Tesla took off again today. You can see over the last 2 days, I believe it is up almost $200, or just a little over $200. Today was 66. Yesterday, I believe, was 120 or so, or 118. So the price is now at 116. But I, talked about their stock split a little bit in another video if you want to check that out. And then my aerospace and defense, I love Lockheed and Martin. I believe I talked about them in a previous video. If not, I'm going to do a separate video just on Lockheed and Martin, and maybe General Dynamics as well too, which is another company that I've been eyeballing. I was eyeballing Raytheon for a while, and then something happened in May, I think it was, and I was like, oh no, I'm not gonna get into them. And there's one thing that I don't like about General Dynamics as far as the future is concerned, on why I didn't pull the trigger on them and I decided to go with Lockheed and Martin first. But so I'll probably do a video on that real soon here. And then my finance, actually doing pretty well. I talk about my opinion and thoughts on my finances, not my personal finances, but the finance slice here with JP Morgan, why I got into them, why I got into Bank of America. Warren Buffett has bought more Bank of America stock, which is something to look into, but I am still skeptical. So for the day, with this portfolio, with this account, I am down $27. And you can see there's some red there. Only this slice did well because of Tesla. Costco is always good. I mean, Costco is one of those stocks that I call a cult following. You pay $60 a month to join them. The lines are ridiculous, at least here in Honolulu still. Even though they're not, partially letting only 20 people in at a time and a maximum of 75 people in the store like they were doing back in May and earlier this summer. Here in Honolulu, we have, or on this island of Oahu, we have 3 Costcos for the whole island, and the island has a little over 1 million people. So they're always crowded here. So, and they're, in my opinion, a good long-term hold because they have the subscription, $60 a month. They have the cheap gas, and if you have a family of 5, it's a really cheap way to buy. So here a lot of people are stocking up on meat from Costco and putting them into their freezers because of the potential meat shortage that could eventually hit Hawaii, which has hit certain places on the U.S. mainland. So anyway, go ahead and subscribe to the channel if you haven't already. Look at my all-time dividends right now, $67.49, which my market gains would only be $265 without that, my earned dividends, but still doing well. Started this July 2019, so we're 13 months in, and I'm over $4,600. I feel like that's pretty good. I did a video yesterday on what I bought this week. Wednesday of next week, I'll probably do another video on what I end up buying for next week. And then September, like I mentioned, I'll either pivot on my strategy a little bit based on new information, or I'll continue along the same path. So next video, I do have a video about Robinhood that I did today, and my next video for my Roth IRA is going to come out in a few minutes. So watch that one and share it with your family and friends as well too. Be safe and healthy out there, everybody. Mahalo and aloha.